Well, my favorite chart setup is basically a cousin of a cup with handle. It's what I call the cup completion cheat. And then, of course, there would be the low cheat. And that's just sort of a cup with handle, but the handle is in the lower, either lower one third or the middle one third, where the cup with handle would be in the upper one third. That's how I define those. Real quick, it's just, I started off with, cup with handle patterns and
Hmm.
started noticing that there was very often there was a lower pivot that would take place within the base before the handle formed. And a friend of mine, we used to talk on the phone all the time, and I would call him up and say, I cheated. I just cheated. I went in early. And so we started calling it the cheat, and then realized that that was when the cup completed itself, that you'd get that cheat area. You don't always get it, but sometimes you get a low cheat, a cheat, and a handle. Sometimes you get just a handle. Sometimes you get just a low cheat. Google came out of a low cheat. If you go back, look off the IPO, Google came off of a low cheat, and you never got a handle. So yeah, so that would be, that's my signature, and it has to have VCP characteristics, volatility contraction pattern characteristics, which again, a lot of people think the volatility contraction pattern is a pattern. It's a characteristic. A cup with handle is a volatility contraction pattern. A cheat, a cup completion cheat, is a volatility contraction pattern. So they all would have to have volatility contraction, and that's pretty much in every trade I ever make. It's going to have volatility contraction. So that would be my number one chart pattern.
So you're talking within the IPO base, maybe down here. Is that what you're?
Yeah, yeah, right there. So that's the low cheat. I don't know if you can zoom up on it anymore. So a lot of times, remember we were talking about IPOs, big
Hmm.
IPOs. Okay, so one of the first areas that I look to buy a big IPO is coming off of after it has that correction. See, Google goes public, it runs up, and then it corrects. Now, sometimes you have to wait a long time. If it's a big, deep correction, it's a 50%, 60% decline. I won't use this. But in this case, you see it comes down, I don't know, 15, 20%, and you set that low cheat. And that's where I'm looking to buy a big cap IPO. This is really like my signature buy point of a big cap IPO that corrects. Now you see how it turns up right there, and
Hmm.
then you see there's no handle. It's off to the races. You wouldn't have, if you waited for a handle, you wouldn't have been able to buy this. Now this runs up, and also something that David Ryan termed ants. The term ants,
Right.
where so we've retermed it, in our seminar now. It's called the David Ryan's MVP indicator. But this goes up. If it goes up 12 or 13 days out of 15 days up, and the volumes increased, that's a stock that you don't want to sell too easily. So you come out of that low cheat, and now you see the days 1, 2, 3, 4, 5, 6, like 7, 8 straight days up, 9, 10, 11,
So you probably
12 out
get
of.
yeah, probably get your first ant right there, something
Yep,
like that.
that's right there. And then so now if you go up a little bit more, you're up 12 out of 15 days. And
Right.
that's a stock that is being accumulated. That's a real sign that you've got institutions really piling into that.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.